Hello and welcome to The Trade. Before we get into the technicals, we are of course seeing a steep sell-off in global markets today. Japan's Nikkei down by around 2%, our market off by about 1.5%, and this was really due to a sell-off on Wall Street due to a lack of clarity in economic data, worrying investors despite the end of the longest ever US government shutdown. And a more hawkish tone from Federal Reserve policymakers also a catalyst for the selling, with tech stocks leading the losses, sending the Nasdaq down by more than 2%. Nvidia, the world's most valuable company, dropped 4.7%, or actually around 4%. Tesla also fell sharply, off by about 7%, and Broadcom was down 2%. But Cisco Systems rallied around 5% after raising full-year profit and revenue forecasts, betting on demand for its networking equipment. We also were looking very closely at what was happening with gold, pulling back from a 3-week high amid the broad market sell-off. Spot gold holding under $4,200 an ounce. Let's get into what we're seeing in currencies now. Nick Twidale from ATFX joining me. Nick, great to see you. So when it comes to the Aussie, I mean, it had a spike yesterday because that unemployment data really surprised.
Yeah, it got a nice, very swift sort of 40-point rally, didn't it? It was a big surprise, I think, for most of the market, and it really does pull back on any rate cut hopes that any householders will have at the moment. Aussie looking nice, but once again, we've said it a few times, it's kind of a little bit boring against most of the other currencies. It's still in the middle of that range. We're sitting at 65.30 now. It's a difficult call to make at the moment. It really will go on this risk sentiment that's being driven by what we've seen in the US. So if we do see a turn back in the markets and they start to rally, I expect the Aussie that will give the Aussie the green light to move further higher alongside the data that we've seen, and probably a more hawkish RBA. Conversely, of course, if we do see these markets to continue to slip, and it was a massive turnaround from what we'd seen earlier the week in the US than what we saw last night, the Aussie will react accordingly as well. So support now coming on in around sort of mid 64s and resistance just above 66 cents.
All right, let's have a look then what we're seeing in Japanese yen. A lot of focus here on intervention too.
Yes, a lot of talk, isn't there? And it's topped out a couple of times just around that 155 level, and you can see it up there. There was actually a little break of that topside trend line that's been in place for a while. It does feel like the Japanese authorities are there or thereabouts. It's going to be very interesting to see when we see their activity in the market numbers later on. But fundamentals are probably still driving it higher at the moment. Certainly the risk off has helped a little bit overnight, but I expect that trend to remain in place and the market will battle against the BOJ. But normally, if they do come in a more aggressive manner, we could see some very nasty moves and volatility massively increase in the coming weeks.
Well, not so nasty as the euro. It's doing really well.
Euro's going very well there. A nice spike last night. It took out topside resistance. It's got up to about 116.50. We're just below that now. Euro's going away nicely. The dollar's really fallen off. It topped out at yearly highs again early last week, and it's sort of retreated. So it's going to be very interesting to see where we go from now. But at the moment, I think you've got to abide by that trend and look to buy dips.
All right, and what's happening with pound?
Pound's similar story to what we saw in the euro. Sharp move yesterday. I think it added about 0.5% on the day. Another big figure interesting there, that 130 level held really well, and that trend line's nicely in play now. As you can see, similar to the Aussie, we're coming into a bit of a flag shape, so expect some moves in the pound, and it wouldn't surprise me if it gets a little bit nasty later on today at the end of the New York session.
All right, well, let's go back to what we saw with the unemployment rate. Sometimes you join me when that data is dropping. So it was, picking your jaw off the floor. What does all of this mean now? It kind of indicates we're not going to see a rate cut potentially at all in 26.
I think we may not now. Obviously, a lot will come from the data that we get in the next month or so and in the first quarter of 2026. But the RBA does seem to be leaning on the hawkish side. They have been for me for most of the year. I think it lends support to the Aussie over the coming months, probably more on the crosses than the dollar. The dollar side of the equation is very erratic at the moment, but it does feel to me that those numbers alongside inflation numbers, unless we see a sharp turnaround in either jobs or inflation, that we may not see a rate cut at all coming in this cycle.
Yeah, all right, Nick, always a pleasure. Thanks so much.
Thanks for having me.
Nick Twidale from ATFX, that does it for this edition of The Trade. Be sure to join us next time.